This is Andrew Stotts of A. Stotts Investment Research presenting the Global Sectors FVMR Snapshot for June 12th, 2016. What I like to call the world sectors in your hand every week. Remember that I look at stocks and markets based upon FVMR, fundamentals, valuation, momentum, and risk. Let's start with fundamentals and look at world sectors. First, what we can see is that the healthcare sector at about 20.6% ROE based upon consensus forecasts is the highest ROE in all of the sectors. The overall ROE in Asia is about 11, or in the world is about 11.7%. Energy is the lowest, as we've seen energy prices collapse, of course, over the years. And dividend payout ratio is very high in energy sector because the equity base has absolutely collapsed. If we look at infotech, the dividend payout ratio is lowest, meaning that they tend to have a lot of cash and they're not paying it out. They're investing for growth. If we look at valuation, we can see the overall world is at 16 times, energy is at 36.8. Again, this is because of it's a cyclical industry and the energy prices have collapsed. On a price-to-book basis, we can see the consumer staples and healthcare are very expensive, though they are relatively stable and producing good ROEs. Also, we can see that consumer staples has a very high PE, so on both PE and price-to-book, we can see they're expensive. The financial sector is very cheap at about 1 times price-to-book. On a PE basis, a little bit more expensive, at about 11.5 times. If we look at momentum, we can see that the momentum in earnings has been terrible, of course, in the energy sector as oil prices collapsed, but coming off of a really serious bottom are bouncing back. The utility sector globally has been down by about 3.4%, and we can see that industrials and consumer discretionary items have been relatively strong in 2016. Next is price, and the sector that's been hardest hit is financials, down about 19% over the last 1 year. And some sectors, such as healthcare, tend to be very, very stable. And consumer staples, those items that you got to buy no matter what, are actually up by 6%. If we look at risk, the first thing I look at is gearing, and gearing is very low at Infotech. In fact, it's a net cash, meaning these guys are sitting on a lot of cash. And we can see gearing very high at utilities companies. This is mainly driven by U.S. utilities companies. And on the materials side, we can see a lot of volatility, of course, in materials companies as the fall in prices of commodities and the like have been putting a lot of pressure there. And on the volatility of price of the financials, again, because of the difficulties financial industry is facing, we see a lot of volatility there. And finally, the utilities sector has volatility of only 11% over the last 3 months, so relatively low. Last one is consumer staples, which is a relatively low volatility of about 13.2. So let's go through the fundamentals. Well, healthcare offers the highest ROE among sectors. The energy sector is currently at low profitability, but high dividend payout ratio. Infotech companies keep a large portion of their cash as the sector shows the lowest dividend payout ratio. Looking at valuation, well, energy is trading at a high PE due to low earnings, and financials trade at about 1 times price to book. Consumer staples and healthcare are most expensive on price to book. Note that the healthcare sector is cheaper but generates a higher ROE. From a momentum perspective, consensus expects earnings to contract in energy, utilities, and financials, while most earnings growth in 2016 is expected in industrials and consumer discretionary. Brexit hit financials, as we've seen in the last 2 weeks' performance, down by 6%, and the sector also has the worst 1-year price change. Finally is risk. The infotech sector has net cash, as we saw, hence low balance sheet risk, and in the past 3 months, materials and financials have been the most volatile sectors. So if you want to sign up for this, well, you'll always be up to date. You'll know all the numbers. You'll be professional because you'll be using what the professionals use. Most important, you do nothing, because if you want more, just leave a comment below.